Investing can seem overwhelming, but at its heart, it's about a few timeless principles, none more important than diversification. You've heard the saying, don't put all your eggs in one basket. That's the core of smart investing. Instead of betting everything on one stock or sector, spread your investments across different assets. If one company fails, your entire savings aren't wiped out. Diversification is about building a resilient financial future, not chasing the next big thing. By owning a mix of investments, you protect yourself from the risk of any single one sinking your portfolio. This isn't just for the wealthy. Every investor should diversify, no matter their starting amount. Think of it as building a team, not relying on a single star player. Some investments may lag, but others will shine, balancing your returns over time. Diversification manages risk. It doesn't eliminate it, but it helps you avoid unnecessary gambles. It lets you benefit from the market's long-term growth, rather than making risky bets. It's the first crucial step to a sensible, long-term investment plan. Diversification is your shield against risk. Imagine your portfolio as an ark built from many materials: stocks, bonds, real estate, each reinforcing the other. When stocks fall, bonds or real estate may rise, keeping your financial ark afloat. Different assets react differently to economic changes. That's the key to stability. For example, stocks may soar in good times, but bonds often rise when stocks fall. By owning both, you smooth out the wild swings and avoid emotional, costly mistakes. History proves concentrated portfolios suffer most in market shocks. Think of the dot-com crash. Diversified investors weathered those storms far better. Diversification isn't about lower returns, it's about better risk-adjusted returns and staying disciplined. A well-diversified portfolio helps you stay the course, even in rough seas. What does diversification look like in practice? It's simpler than you think. A classic example: the 60-40 portfolio, 60% stocks, 40% bonds. Stocks drive long-term growth, bonds provide stability and income. Don't just own domestic stocks. Add international stocks and true global exposure. Different economies rise and fall at different times, so owning a slice of the world reduces risk. Diversify your bonds too. Mix government and corporate bonds, short and long term. This protects you from interest rate and credit risks. The easiest way? Use low-cost index funds. An S&P 500 fund covers hundreds of US companies. An international index fund adds global reach. A total bond market fund gives you broad fixed income exposure. With just these three funds, you get instant, effective diversification. It's far better than trying to pick individual winners. Diversification's true value shines during market crises. When stocks crash, concentrated investors panic and often sell at the worst time. Diversified investors, though, see smaller losses and can stick to their plan. In 2008, the S&P 500 fell over 37%, but a 60-40 portfolio lost much less. Bonds even gained value. This safe harbor effect cushions your portfolio and your emotions. With less severe losses, you're more likely to stay invested and even rebalance, buying low for future gains. Diversification isn't magic. It's the result of owning assets that don't all move together. It rewards discipline and patience, not reckless risk-taking. In calm markets, all stocks may seem faster, but in storms, you'll be glad you chose the sturdy diversified approach. Diversification keeps you in the game for the long run. Diversification is the foundation of smart investing. It's not a fad or a secret for experts, it's timeless wisdom for everyone. The goal isn't to get rich quick, but to build wealth steadily and securely. A diversified portfolio lets you participate in growth and protects you in downturns. It brings peace of mind even when markets are turbulent. Avoid chasing hot tips or making big bets. Own a little of everything using low-cost index funds. Stay the course and let compounding work for you over decades. Your portfolio is your vessel to reach your financial goals. With diversification, no single storm can sink your dreams. Spread your wealth, stay disciplined, and let diversification guide you to a secure future.